So, to see what's happened to downtown and Koreatown and all these areas and the birth and growth of Silicon Beach in the last few years into its own sort of transformative real estate market, in a sense, is just nothing short of dramatic to me personally. So I'm originally from Chicago, by the way. So with that said, what we're doing, this panel is all about the broader resi market. We're talking about what's happening in these bigger submarkets in Los Angeles, in the transformation that's happened here in recent years, and we want to get into things like spec homes and all the fun stuff. So, and the celebrity real estate. On our panel, we have a really great panel. I think they're going to get at it today. So I want to introduce them, if I could, here. So first of all, we have Ernie Carswell, and Ernie helms his own team within Douglas Elliman with 11 members. Is that right? Still? 11 and counting. And he's been included in the Hollywood Reporter's top 25 real estate agents list. South Carolina native. I think you cramped up your career in New York primarily back in the day, selling on the Upper East Side.
That's true.
Is that right? And then you've been in Southern California since 1990. Yeah. Wow. Next to him we have James Harris, who is one of our sort of super agents here today on the ground. James is obviously if people don't know him, he's a Brit, originally from London.
Indeed.
And I think you have this sort of, you tout on your own website your sort of British style and American drive, whatever that is. And anyway, you previously were known because you co-founded the luxury real estate firm Bond Street Partners, and you have a longtime colleague, David Parnes, and you guys specialize in the high-end real estate area, particularly in the glitzy neighborhoods, Beverly Hills, Bel Air, the Triangle, the Palisades, Malibu, etc. I think you were talking before that in 2017 you had a record-breaking year as a team. Was it $515 million in sales?
Correct, yes.
Congrats on that. That's awesome. Next to James we have Beth Stein, and Beth is the power behind Coldwell Banker, in a sense, one of the powers, right, as the COO and Vice President in Southern California. I think Beth has been in real estate for a long time.
Greater LA, I think that there are some people who'd be pissed off if you said Southern California.
Okay, all right. So, but branch manager and chief operating officer, right, of Coldwell Banker.
Chief operating officer and vice president.
Got it. Okay. All right. So Beth has been around since for a long time, and in the game, and I think that one of your claim to fame was the Belvedere sale, right? Back in the day.
I oversaw that. At the time I was managing the Beverly Hills South office and was very involved in it. But I've been in this business long enough that I've seen every single one of these guys come in.
Wow. Yeah. That's amazing.
Go Beth, go Beth.
Go Beth. All right. On that note, next to Beth, we have getting my notes.
I can take this for you if you want to.
Nick Siegel, sorry. The president of Pacific Union here in Southern California.
In Southern California, let's.
Okay. And Nick's been an East Coast native, but you've had a big impact on LA real estate for a couple of decades now, maybe 2 or 3. Is that right? And I think that Nick, I was reading that after PAC-U at one point achieved more than $11 billion in sales in only 8 years. Is that right? Yeah.
That was a previous company, Partners Trust, correct.
Right. And when you were previously at Partners Trust as the COO, you received the Realtor of the Year award in 2012, right? And next to last but not least for sure, so a well-known presence on television and in the regional and national real estate market, Josh Flagg. Everyone who may watch Bravo's wonderful $1 Million Listing LA would be familiar with Josh and his exploits on that show.
No, I should say thank you.
I know, right? And all the feuds and faux drama that come with being in reality television with Bravo, right? If they want to call it faux. And Josh is at Rodeo Realty, and I think it goes without saying that you had over $2 billion in sales, I read, in your career so far?
In a 14-year period.
In a 14-year period, okay. But still, impressive. And I think you were the #1 agent by volume in LA and have been in the top 2 in sales in California at one point.
This year, but That was 2 years ago.
2
but
years
maybe we'll do it again.
Right. Well, good luck. Anyway, so with that, I wanted to.
We came close this year, but not quite.
So I wanted to talk about some of these transformations, but I think one of the hot topics that a lot of people are realizing with a lot of the headlines that have been coming out recently is what's happening with all these spec home sales that we're seeing. Developers are putting up these incredible guys like Mohammed Hadid and others have been putting together these amazing homes. And for some reason, we're seeing them listed at insane prices, but we're also seeing them move in many cases. So I wanted to put it maybe to James, who's on the ground. What do you think, James, is going on with these spec homes?
I think we're in, for me, one of the most amazing markets, certainly that I've seen in the last 15 years of living here. I'm sure a lot of the people on this panel have seen the cycles. They've seen the market go down, they've seen the market go up. But I think LA as a city is very much changing. I'm born and raised in London, where I watched London as a real estate market grow very quickly, and then Brexit took place, and I saw destination cities like New York and Miami rise very quick. And LA seemed to always be sort of behind those prime markets. But yet in LA, we have some of the best weather in the world. We have the best lifestyle in the world. You can surf in the morning and snowboard in the afternoon. And I feel like people have now caught up and kind of found out about Los Angeles. And people are now building. Buyers are buying. And I feel like people talk a lot about the international market. And there is a big international presence here in Los Angeles. But I also feel like there's a lot of domestic trading. A lot of Americans from the East Coast are moving to the West, and there's a big tech presence coming to Southern California. And, you know, I feel like the whole market is shifting. And to be honest, $3,000 a foot, which seems like a crazy price per square foot for many people in this room and also around the world, but we're still relatively cheap compared to other major cities around the world on a price per square foot basis. So people see that they can come to LA, they can buy a 20,000 square foot house that has views from downtown to the ocean. The house has over an acre of land, all the bells and whistles, and they're only paying $3,000 a foot. Where in London, you can't buy an apartment in one of the best areas of London for less than $6,000 per square foot. So people see value, the houses are selling, and we're in a very strong market. I'm sure you guys would agree.
I want to see if anyone else wanted to jump in, because I'm curious, you know, are some projects, are these projects, are they too risky to find a buyer? Beth, do you have any thoughts on that? Or?
Are they too risky to find a buyer? I think in some instances, but you've got to remember some of these people are asking exorbitant prices, and they're not selling for those exorbitant prices. And that's the difference. You know, Niall Naimi was asking originally $500 million for that property on Errol, and it's not going to go. He's already reduced it. It's not going to go there, but he will still get a record number based on the square footage. And Mohammed Hadid's project, the one in Bel Air, is still in question as to whether they'll even allow it to stand as it is, because it's already been ordered to take it down once. So, and it's up again to see if they're going to make it happen again.
My friends are actually the ones that are suing him. They're my friends, the Bedrosians, and another guy, Horacek, lives right downstairs, right down the road. And they really think they're going to get it torn down, because technically you can't put that house back into code no matter what you do to it.
That's exactly right.
But going back to your, to your question, you know, I have always thought that LA for years was underpriced, and when a lot of people said, oh my God, a house for this is going back years, $6 million, $7 million in the flats, I always thought, that doesn't sound expensive to me compared to when apartments on Fifth Avenue are selling for 30 and 40. So at a time, I thought LA was very underpriced. And then I thought all of a sudden, things started to catch up, and really rapidly, and then it started going $2,000 a foot, then $2,500 a foot. And I think now we're at a point where we've really peaked. And it's not necessarily a bad thing, because, you know, cycles happen, and they're generally never more than 7 years. We're really into the end of the cycle. And it's not a question, will it burst, will it not? It's going to happen. The question is, what are the repercussions going to be? And is it going to be dramatic like 2008? And I don't think anyone on this panel probably thinks that's going to happen. I really don't think that. I think there'll be a small correction. I don't think it's going to affect our business terribly. I think it's going to be a different kind of a buyer that's coming. You know, there's always divorces, there's always deaths, there's always financial problems, there's always people that want to buy properties for less than they could have the year prior. What concerns me and what I think is going to be kind of the problem, what's going to start to make prices drop a little bit, is that I just don't believe, you know, there's like 40 spec homes coming on the market, and they've all started the process 18 months ago, and they're all going to hit probably around the same time. And it's already started to happen. And there's just not enough buyers for that many houses.
What's the price point on those spec homes?
Well, the ones I'm concerned about are the ones that are like 30 to 40 million, because when those start selling for 20, it's going to make the $20 million houses sell for 15, and the $15 million houses are going to sell for 9, and the $9 million houses are going to sell for 5, and so on and so on. Well, maybe at some point it won't go down to the 2 million point, but I think it will. I think that market will be safe because there is enough people for that market, but there's just not enough people for $50 million homes. And I think we've gotten to a point where it's creeped up so crazily, where I remember when there was only 2 houses ever sold past $100 million. I remember when Gary Winnick's house was the highest price ever for a house. It was David Geffen's from 1992 at $100 million with the furniture. And it was 96 million or whatever for 102 for David Geffen's, which was a trade with the Salvatore property. It was kind of a swap. So those were the only 2 until, I would say, possibly till Playboy.
2 years ago.
Yeah,
to
but
Playboy.
there was but to that point, there was a legitimacy to those historic sales in the
Fully
back.
agree.
You know, the grand
they were worth
Hilton
it.
Estate on the Bel Air Golf Course and all that.
sure.
The winning. What my concern is about the new buildup of the development spectacle houses is the surprise pricing. It's the pricing of these homes to get attention from the public. It works. You put a house on the market at $250 million, suddenly it's all over the world. It might be worth half that or less, but it certainly got the world's attention. That might be Niall Miami's plan, you know, for the $500 million house. I remember we all heard about the $1 billion apartment in Mumbai. I mean, you know, and I've never been to Mumbai, but I know about that price. So pricing artificially high gets attention, which might be good for that property, but it hurts the rest of the really priced, fairly priced developments. I think that there are a number of good developers that we're working with in the Platinum Triangle and all parts of Los Angeles, in the luxury markets at least, that price fairly, and they get their price. We see those sell. And then there are the big tankers that come on with a lot of excess price. They get a lot of bells and whistles and attention, and there's some fun parties, but they sit on the market longer. So what I would like to see is more reality in the pricing, because to your point, Josh, as those 30, 40 homes that are going to be due later this year and all throughout 2019 coming on, if they don't price fairly, there's going to be a big depression collectively.
And I think the problem also, and this is any price range, sellers, it's like nobody ever learns their lessons. People go through cycles. They think it just goes on forever and ever, and it's not going to correct, and it will. But the bizarre thing is people want to ask $100 million for a house that I think maybe they really believe it's worth that when it's really only worth $60 million. And if they priced it accordingly, they would sell it for more. Because, for instance, had Bruce Mikowski not priced his house at $250, let's just say he priced it at $140 2 years ago, he might have sold it for $140. If I was to guess, that house would probably trade no more than $90 5 years down the line from now. So,
Will Petra Ecclestone get $175 now that she's cut the manor down?
That's absurd. First of all, she paid $76 million for the house, which was a lot of money at the time, and then she had to put another 20 into it, at least. So she's in it for 96. So okay, so call it 100. Maybe she'll get her money out of it. Maybe someone will pay it.
But there's more value in, say, Petra Ecclestone's estate than there is a new spec home that's just 100%. Been built, that's modern, that's 30,000 square feet, priced at $3,000 a foot. Because at her property, you can't rebuild it. You're buying land that's irreplaceable. And actually, I think that house will sell probably around 150 million.
Well, the thing is that the thing that I never understand, and I always tell my clients this, I say, you can go and spend $40 million for a brand new spec house, great. But a house is a diminishing asset. The land is what appreciates over time. So think about somebody who bought a house in 1980 that was so grand at the time, and they paid a fortune for it. Now look what it looks like. It has glass block tiles, you know, and it's stucco, white stucco, and it's tacky, whatever. So you have to buy the land. And when, for instance, I sold Betsy Bloomingdale's house, at the same time, you could have paid I traded it at 40 million. You could have bought a house in Truesdale. I think there's one that traded for 40 million with an amazing view, but a brand new, whatever. Think about it in 20 years from now. What's going to be worth more, 3 acres on Delfern Drive or a great view with a house that needs to be torn down in Truesdale?
You're also talking provenance, which also gives a whole other level of quality and of price point and of value to a home at that kind of caliber.
So one thing to consider also to answer your question, as a leading indicator, to what degree, and are you guys, the three of you, finding this out there because you're in the trenches with this, more and more we're seeing developers having brokers produce and present shovel-ready projects. They don't want to develop it anymore, but they'll sell it to you, and you can develop it. And so how is that affecting the market from a speculative perspective?
Well, James and I actually have that right now. We have a client that owns 2 properties, one on Pamela Drive and one on Tower Grove. I sold them the one on Tower Grove. Actually, James and I sold the one on Tower Grove. He represented I don't even remember. He represented one side, I represented the other. In any event, we just put them both on the market and for a very hefty price. And because the seller thinks that somebody will pay, it is turnkey, ready to go, shovel ready. For a house on Pamela Drive, we're asking $26 million. He paid $10 million for it a couple of years ago, but now it comes with the plans and the permits ready to go.
What did he put in? What do you think his additional investment was? $2 million?
No. Actually, you know what, granted, those architecture drawings, he spent a fortune. Maybe let's call it $1 million. I don't
Opportunity cost of the money that he's got tied up in the property now.
Could it trade for 15? Maybe.
But this is the interesting thing, and this goes to what's originally your question was. This developer would much rather sell that shovel-ready property than actually do the build-out now, because we're all seeing that we have cycles.
Right.
Construction cycles, same thing with apartments and units. There are cycles when you're building, and there's cycles, it's time to build and time not to build.
Yeah, but I think there's certain things that are safe. Like, I think I just bought a house in the Flats right now. I'm not concerned. I think the market's high right now. I think that $6 to $9 million range in the 600 block, the 700 block, will be fine. I don't think that's going to drastically change because I think there's enough of a demand for people, but I don't think there's enough of a demand for $35 million spec project shovel ready.
I want to move on if I could. I know it was a great conversation, but related to this, I wonder, is LA becoming finally kind of a destination city for these kinds of properties? And maybe James can get into this. I mean, previously we had this notion that New York and London were the global cities, and LA always had its place, but it was a little bit of an island of wealth and luxury unto itself. Is that changing? Do you have any examples that you can speak of about that?
I cannot tell you how much in the last 5 years I've witnessed Los Angeles change as a city. And all you have to really do is drive up and down Sunset Boulevard and see how many millions of square feet are being developed right now to realize that new companies are coming here. You drive out to Venice, you see the tech companies moving. I mean, Southern California, but Los Angeles is very much changing. We just sold a home in Bel Air that was one of these spec houses that was 15,000 square feet. It closed for $41 million, and the buyer was a developer. So a property that was built for spec was bought by a commercial developer. Not to get into names, but the developer is from San Francisco, and he owns and has built 12 million square feet. And he built for the tech companies, Facebook and YouTube and Apple. And so there's a reason he just invested $41 million into a house in Los Angeles, and that's because he's about to build a skyscraper in Los Angeles for the tech world. So I think, yes, there's English people, there's European people, there's Asians, there's Russians, and we have diversity coming to Los Angeles, but there's a huge wave of tech money and East Coast money and San Francisco money all coming into Los Angeles. And whilst, yes, we see cycles and we'll see things go up and we'll see them come down, I just see LA as a very bullish market right now, and I just don't see anything slowing down. Maybe I'm a little too optimistic, but that's very much how I feel.
Optimism is good, but over the long haul, I've been through 4 cycles of ups and downs. And I was in New York City when there was a boom market there, and then I was there for the crash in New York. So even great cities like Manhattan or Los Angeles can have big setbacks.
There's a difference between a crash and I think you said you went through 4 cycles. Were they all crashes or just corrections?
Well, it was probably before you were born, but they were crashes.
Well, we had 2 crashes. We had two very definite crashes, and then we had 2 corrections.
Yeah, I'm talking about the 80s, Josh.
What?
And
It was bad.
Yeah.
No, I know, but
But
prior
we also
The
had
90s
25% interest rates, and that
Exactly.
was, you know.
what was in between?
Ernie's showing his age.
But-
You look good, Ernie. You look
Got a
good.
birthday this week.
All right,
And
but
as
go
far,
ahead, Beth.
As far
Yeah.
as the destination city, I'm sorry, I know you can't get a word in with a wedge here, but as far as destination cities in Los Angeles, you young child, Beverly Hills has always been a destination city, and it has had cachet from the beginning of time. It's had cachet since the Doheny's and the Gettys, started developing here, and it is, we are a company town, and our company is the entertainment business. And so you've got two kinds of people here, people who are in the entertainment business and people who work for people in the entertainment business. So it will always be a destination city because of that.
You never see the crash coming, and then it hits you in the face. So I remember talking to Steven Shapiro at a house on Walden in the flats, and he goes, Nick, there are 24 homes in the flats right now, and I haven't gotten a call. I've got 4 of them. I haven't gotten a call on one of them. So when it comes, it is very precipitous. Now, to Josh's point, I don't think because we're underpinned by a lot of equity in this market, I don't think we're going to see that precipitous crash, but we are going to see a correction. And if you paid, let's say, $6 million for a home, and it goes down 15%, I don't care how much money you have, that hurts. So we just need to be a little more judicious, I think.
Yeah, but I think
we
in our
present
business,
this.
the thing is that I don't know if our business, for us, but during your crashes and your corrections, did your business change much, or did you just have a different
Oh,
kind of a
God,
buyer?
it's an industry shift. Let me
No,
tell
but
you.
it was a different kind of a buyer. I don't know if would you say?
no.
Yeah, there were fewer of them.
But would
Yeah.
you say that your income went in half, or would you just say?
Yeah.
that-
Oh, yeah.
In many
No,
respects.
totally. And price values. I mean, I remember when Beverly Hills values dropped 40% like in 1 year, okay?
That's right.
So here's the thing to your
Give me
point.
that look again, Ernie.
What's that?
Yeah.
Give me that look again.
Dropped
Look.
40% in 1 year. Okay, we were all alive. Okay, so, but to Josh and James' new listing on Pamela, the reason these guys or females are doing the RTI is because these developers are reading the tea leaves.
Mm-hmm.
They see a coming correction. 3 years ago, they would have built the house. Right now, there's an array of homes coming on in all the platinum areas. They capture something, they spend some money with their developer, with their architects and design teams and landscapers, and then they say, okay, RTI, they triple the price and they want someone to buy it.
But I don't think
because
that's
they don't
because
want to
they're
build it.
But I don't think that's because they're nervous about the market. I feel like, firstly, all the codes in Los Angeles have changed, right? So what you used to be able to build, you can't build today. So if I'm a developer and I've paid $6 million for a piece of land and I can now build a 10,000 square foot house, if I was to buy that same piece of land today and apply for plans, I could probably only build 7,000 square feet, right?
Okay,
Because the code has changed. So now I've created value in the plans and permits that I've bought, essentially. Okay?
They would probably just build it themselves then.
And as long as they don't expire.
But we've sold properties where they paid 8 for the land, they've spent 2 on the plans, and they flipped it for 15 million, and someone's gone and built it and spent another 15 million, and they've sold it for 60 million. Sometimes it works, but no, if there's a correction, there's going to be a problem.
Oh, yeah, and no one has control when it gets corrected. But why the high price then on Pamela? I'm sorry to pick on Pamela.
Oh, we didn't price it.
Yeah,
but we didn't.
Lovely street, though, by the way.
It is.
It's a fabulous street, and I'll tell you why. Because what our seller doesn't recognize on that property, he's a very smart guy, but what he doesn't recognize is the house right next door to him sold for 16, which is a smaller lot. But what he doesn't understand is that the Guthrie-Renker people who live in the old Buster Keaton estate above bought that to restore it. They would have paid anything for it to bring it back to the original estate. So that's not really a comp, because in a normal, that would never have sold for more than $8 or $9 million, that Portnoy house. That was the person who owned it. It just wouldn't trade for that more, and somebody had to have it. So you can't really, that's why he's priced it this way, and we probably would have priced it far less, but.
So this is my secret to my sellers. I tell them, ask less and you'll get more. Mm-hmm. I'm not saying ask less than the market will bear. I'm saying don't gouge, because everybody waits for you to reduce, and then after long enough, after that, in come the bottom fishers.
But nobody ever listens.
Ask less, and you'll get more. You'll get more offers. You'll get more demand, and you'll actually get more control.
You know what? The price reductions are the first signal that the market is starting to shift. And I did go to the Anderson forecast this morning. I don't know if any of you all did, but it was pretty interesting, because they said that they're expecting the prices in California to rise a little bit more for the next year, but they are expecting a correction protection. There has to be. Right now, the debt, they're allowing a complete debt-to-income ratio on properties where there are lenders involved to be 45%, which is a staggering number. In addition, when they are qualifying, stock options and cryptocurrency to be part of your portfolio and part of what your net equity is and what your net worth is, knowing that it is as volatile as it is, the first thing they've said is a 200-point hit to the NASDAQ is going to create havoc in our market. So I don't think we're going to see as much of a dip as we did, 40% drop, but I certainly think it's going to be more than 15%.
I think you might see a 20% drop, but people say, well, you worried about what's going to happen. Maybe I'm wrong. I don't think, and I could be wrong, but I don't think our incomes are going to change dramatically, because I still think that that's when the buyers are going to come out, because you have a large Persian community in the flats, and they buy up as much as they can. And when the market drops and they have a lot of cash on hand, I think that they're going to want to.
Well, they buy for as much as they can for as low as they can.
Sure, but I'm saying, but there's still, of course, but that's not a bad thing, because we still have to broker the deal. So what I'm saying is, I don't think that our business is going to change. I just think it's going to be a different kind.
But your business and our business up on this stage isn't necessarily the same as everyone else's business. And all of these crazy numbers of 40 and 50 and 100 and 250 million, those numbers are insane. And what I have quickly learned, which someone in this room actually told me when I started in this business very early, Karen, thank you, was whilst we're all here focusing on these big deals, we should also be focusing on the millions and the 3 millions and the 5 millions, which are the bread and butter deals. So when there's a shift, we're prepared, and you're still making money.
That's a great segue, James. Thanks. To the next topic I wanted to dig into, and that is what is this? Is there a new most challenging segment? I think, Beth, that you were mentioning at 2.5 million, or is that what we were talking about?
Well, what we were talking about is the fact that the starter market is really in Studio City, Sherman Oaks, and the Valley, where the average sales price in the San Fernando Valley is $707,000, which is staggeringly high. And by the way, that's for a teardown. So if you want to get into Studio City, you're looking at a teardown for $1.7 million. That is insane. That is where we're having a challenge. If you want to have anybody who's come, we talked about this earlier, or on the phone. If you're in the entertainment industry and you're a new actor or a new actress and you've just gotten a great part and you're making a modicum of money and you want to live in something that's impressive, the only place you can go to spend $3.5 million and get something that's impressive is in Sherman Oaks or Studio City, some areas of Encino, and there. That next step up is going to be an $8-10 million house. And that takes a series that's going for a good long while. And so anybody who is, the average sales, the median sales price in LA County is $562,000. The average income for a Los Angelino is $52,000. Doesn't compute. There is a chasm, as we talked about earlier, between the haves and the have-nots. And this is what our challenge is going to be going forward. We don't have a first-time buyer's market. We don't have first-time buyer's inventory.
Fascinating. Anyone want to weigh in on that? I mean, Ernie, did you have any thoughts on that?
No, I concur with Beth. There is a real disconnect. The three agents on the stage, we get to work with this luxury crowd, and it's very exciting. The demand and the intensity is the same as it is on the ground level for the first-time buyers. It's intense, but I do have a concern for the general populace, so to speak. And if I may migrate over with the two executives of the largest companies we have here on stage with us and the three agents, I have a greater concern that does affect everyone in the room, and that's about the industry at large. Pricing is something that we all figure out, and we have privately discussed with our clients, and we get some coaching. But I think we're in an industry that's fast changing under our feet. The public wants more access. And we see this with apps coming on. We see this with all kind of companies coming into this industry that has no background in real estate. Whether it's tech, it might be what your guys thinking about doing here, James. But, my concern is the public wants access, but they don't have expertise. The people on stage and all of you have expertise. And what we need to be doing collectively and in a organized manner is educating the public that they need us. Because if we don't take some changes to our efforts to befriending the public There are a number of industries I can point out to you that have gone by the wayside because they ignored the public. Because it's a moving machine that's going to move either right over us or we're going to be able to influence with our expertise, our experience, and our knowledge.
Right. Well, let's talk about this. So you're getting into the issue of the transformation of the whole brokerage industry, which we were talking about. And we talk about transformation. You can't not talk about what's happening with real estate tech, with Compass, right, who's not on this stage, but certainly in the room, and all the things they're doing. And I'm wondering, perhaps, Nick, you want to address this, what is the impact of this real estate tech, and what is it doing to the industry even here on the ground in Los Angeles?
Well, I'll do a test case. So if tech is the play, to what degree do the three of you use technology to build your business and sustain your business? Is it part of the fabric, or is the technology the cell phone that you use and then
Were you
meeting
talking
face
about
to face?
social media, that kind of stuff?
I'm talking about new technologies that could help streamline your business versus the technology you use every day.
Anyone who knows me knows I'm archaic. No, the answer is I use none of that stuff. I don't have the apps. I don't do any of that stuff.
Okay.
I go on the MLS at the office. I get updates sent to my email every day, and that's how I do it.
Right. So James, to what degree are you using it?
I'll say this, and here's the reality. We live in a world where social media, digital marketing is everything. However, and I've been selling real estate since I was 16, it's a people-person business, okay? And yes, I can throw fancy parties and do an amazing Instagram video and send out a great e-blast and, build a beautiful website. But the truth is, if no one's looking at the website, what good is it? So for
Makes the seller happy.
For me, it does make the seller happy. But for me, this is a people-driven business. Unless I'm out there and I'm in front of people and I'm attending an event or speaking on a panel or going to a function or going to my daughter's school or whatever it might be, unless I'm networking and putting my face in front of people and being creative and thinking outside the box, no matter how good my marketing is, I'll fall behind. So it's great, but you also need to be in front of everyone.
So Ernie?
For me in tech, I pay for it. I can't do it myself. This is how maybe Josh and I are more alike than we realized. But I'm willing to pay for it, and I do. I have a marketing director, and he does all of my posting. We stay on the cutting edge as best we can on all the new technology, the new sites, the apps. And I'm beginning to see leads coming in from the technology sectors, and I funnel those to my team. I tend to be, as James said, I'm on the relationship line. I'm all about who I know and who knows me and the hand-to-hand touch, feeling, trust basis with my clientele.
It's hard, yeah.
But Beth, may I put it to you? I mean, Compass is a people-related tech play, if you will, in the real estate industry, and they're growing by leaps and bounds. Why would this not be good for consumers in the end if commissions?
I don't know
come
that
down
I
and
would
so
call
forth?
Compass a people-related tech play. I wouldn't call it that at all. It's a tech play. The reality of it is technology is so much more than marketing and advertising and using video and getting out there and using social media. It is so much more than that. It's CRM. It's being able to have a platform that you can, zip forms. That's all. We all use technology. But the one thing I can say, and from where I am in my job and where Nick is and what he does, is the one thing we all see is the people who are incredibly successful have all kept one thing in mind. This is a people-to-people. It's a nose-to-nose and belly-to-belly business, or more nose-to-nose now. But it is really about the kitchen table up, and not the boardroom down, and you can create as much technology as you want, but the people who are highly successful, who have repeatable, sustainable, and sellable businesses are the people who are out in the field and talking to people. Yes. It's about being in front of people. The people who do the most business are at events, socially, they are at fundraisers, they are meeting and getting in front of the right people. And the more you raise your profile, the more business you'll do.
I think that the bigger issue is, whether it be in any individual company, is how are we dealing with our commission structure? And commissions are negotiable. And
no,
when there are fewer deals to be had and the competition is that much higher, I mean, think about your last listing appointment. There were easily 4 or 5 other brokers vying for that same listing. And if your value position isn't dynamic and poised, the path of least resistance is commission and that discussion, and more we're seeing commissions go to 3.5%. So the listing agent's working for a point, and they're offering 2.5, but the business model only allows for them to try and double end that. Well, if you look at the statistics of the marketplace, 88% of the time it's the cooperating broker that brings you the buyer. So now if you're precluding 88% of the market because you're trying to self-sell it to try and make your margins, it becomes a very interesting dynamic.
It's not how much volume you do, it's how much really money you guys keep. And the reality of it is you've got to prove your value, because otherwise it's a race to the bottom. And we will end up like the market in the UK, where you have a 2% commission and the listing agents are representing the properties and the buyers themselves are out doing all of the footwork. And that's not the kind of market we have. But we've got to be able to show and sustain our value and be able to demonstrate your agent value proposition. And if you can't do it well enough, this ain't the business for you.
Well, that's what I always do when I go on a listing meeting and they're interviewing 4 brokers and they say, well, the final question, what's your rate? And I go, let me just be honest with you. The percentage of the commission relative to the size of the deal is so small. You can go with a RE/MAX agent in the Valley that'll do it probably, or Mike Glickman or somebody that'll do it for 1% or a half a point. Great, go with them. But let's see how much they get you at the end of the day. Let's see if what you're going to come out, your net, let's see if it compares. And the other thing I was going to say is you know, there's kind of a thing in the Beverly Hills office where we don't, it's kind of just a handshake agreement between all the offices that you don't really change the reciprocal agent percentage down, or as far as that's what my manager always tells me.
The CSO?
Yeah,
selling office?
yeah. And so, I mean, I sold a house that we closed this morning. It was a $13 million house. It was
Congratulations.
Thank you. It was the highest sale ever in the history of Westwood, actually. Little Homeby. And we closed it, and I never look. A lot of agents look at the commission before they show properties. I've never done that because I'd rather make the sale, even if it's a little bit discount. Look, why? That's something that's bizarre. But it came in, and I looked at it. It was 2.25%. I thought, that's interesting. I wonder why the seller. I'm happy with it, but I wonder why the seller for $13 million thought, let's futz with the buyer's commission instead of just the listing agents. Don't you want to give as much incentive? And I was kind of
How about why futz with the commission at all?
Period.
What's more important, to net more money in your pocket at the end of the day or save dollars on the commission?
We didn't understand it.
How many people in this room are actually real estate agents? I'm actually curious. Because it would be interesting to know, for me, and I'm sure a lot of you in this room, it's not, I feel like if you're focused too much on the commission and holding out for 5%, you end up becoming your own worst enemy, because we're in an incentive-driven business and we make money and write our own paychecks, and the more that we make, the more successful that we become. But the more sort of cutthroat you become on your commission, in my opinion, and you start arguing over dollars and cents, you start forgetting about volume. And this is a relationships-driven business. I've been in a number of listings where, you know what, I had to take a cut. And whatever the reason was, but guess what? Something else came from that listing. Whether I was sitting at an open house and I got another listing, or I met a buyer, or the buyer came in, they didn't buy that house, they bought another house. For me, this is about the bigger picture. This is about long-term, not short-term. But yes, we don't want brokers discounting fees and cutting us out of the deal. But I also feel like you have to be smart and not greedy.
You know, I think one successful transaction at any price point will turn into 5 over the course of 12 months.
Right. Just so along these lines is interesting because you talk about this issue, but then there seems to also be another trend at work here: the race towards, or the need for exclusivity that a lot of companies and brokers are expressing with this kind of explosion of pocket listings. You know, we see them, some of them then reveal themselves, like Ron Meyer's $125 million Carbon Beach, pocket listing recently. And I know that of course, Pacific Union threw up a platform recently, and there have been some others. Could you talk a little bit, Nick, about your experience with pocket listings and why is this happening? Why are there...
Sure. Well, it's organic. We're just playing to the marketplace as it evolves. Approximately 30% of the Pacific Union inventory is sold off market, and I would imagine that's consistent. Yeah. Well, and so when you look at that, and buyers are desperate for inventory, they're going to look for it anywhere they can find it. And so what we were able to do at Pacific Union was create a platform because of our size and say, if it's a valid listing and you have an SELM, and it's either going to come to market or it's just going to stay as a pocket, but the commission structure is protected, that's defined, and our pricing is defined. So much of the pocket problem is, Josh tells me he's got a pocket listing, it's $20 million, great, I get my client excited, and no fault of Josh, but suddenly the seller says, you know what, 18 just doesn't work for me. I don't want to sell it now. Well, that's a problem for all of us in that moment. So we're just trying to authenticate the inventory that's either going to come to market or stay as a pocket listing and give a platform together. And within the first 10 days, we've already got 53 listings on it. So it's almost 200 million at this point.
But how do you know that $20 million property with maybe he would have taken 18 wouldn't sell for 22 if we weren't allowed to be, if it wasn't actually on the open market?
Well, sure, there's always going to be that dynamic, but for those that want to play it a certain way, we're speaking to that marketplace as well. Most of the listings at Private View will come to the market. We're just taking advantage of the dormant time between the time it's listed to the time it actually goes live in the MLS, and that's on average between 10 days and 3 weeks.
I'd also like to add to that, and now I know how many real estate agents are in this room. I'd love you all to write this down, and that's thepls.com. Here we go. And I'm going to explain why.
Here's a commercial.
Advertisement.
No problem at all. It's the pocketlistingservice.com. And I'm going to explain why. Because Pacific Union have set up a platform because it makes sense. And you'll love this. We set up a platform which we now have over $5 billion worth of inventory.
Can I ask you a question on that?
6,000 members.
I just want to ask you a question. How much of that's actually listed inventory?
Every single property on there has to have a signed listing agreement.
And who authenticates that?
We do. We won't put anything on there without a signed listing agreement. And I want to add, as a broker, you may not want to divulge too much information, so you can put as little or as much. What Pacific Union have done, to my knowledge, is they have a platform for Pacific Union agents. And
the general public.
And the general public, which
and
to me,
and
I'm not taking away from that, but for me that takes away from the exclusivity of a pocket, whereas the platform we've set up brings the power back to the broker. It's only for brokers. If you have a BRE license number, you can have an account and you can promote your pocket listings. And as Nick said, one thing that we all get here is 20 emails a day about a pocket. We all get it. And unless you have a buyer at that very second, it's forgotten. So it's about aggregating and putting all of the information on one platform so that if you have a buyer or you have a seller that doesn't want 300 people walking through your house at an open house, or you want to test a price point, you can put your property on this platform and use it to the seller's advantage or not.
Oh my goodness, Alexi, we're going to need more time.
Yeah, I know.
Keep going
Oh
here.
my God.
This
My
could go on for
concern
all
is
night.
this. I think the pocket listing situation is an indication of the public's erosion in trust in the systematic way we've been selling real estate with confidence for decades. And everyone wants to feel special. Everyone wants to feel their home can be a little bit more private than the next. But as it begins to grow, to your point, Nick, that the public wants it. I have my clients wanting me to list, pocket listing and all of this. I tell them there's no such thing. I'm not saying it's not the PLS, but it's a private listing. Not a pocket. There's no such thing as a pocket because that's a secret and that's not going to help you. You want a private listing that your broker knows about and distributes to their community of peers or to qualified clients. Now, what James is talking about, the PLS, and I think Top Agent Network also has done this, a network among professionals that communicates what their private listings might be, but these are intended really to be available to everyone in the public. Am I not wrong?
You're wrong on our platform. Our platform is only for agents with a BRE.
Okay, good.
So it's
but Nick, your platform's a little different. Is that it?
It's open to the general public. We want to expose it to the general public, yes.
Okay.
But I think that Ernie brings up a good point. Where does this all go? Where does this all end up? At the end of the day, is everybody just going to have more and more exclusivity, and the MLS is going to be sort of
I think
irrelevant for
this is an answer to
higher-end
Zillow,
buyers?
is what we're dealing with right now.
Agreed.
We're
Yes.
trying to make brokerage more relevant, and however we do it, I don't care if it's PLS, I don't care if it's Private View. We as a brokerage community, and Beth and I are sitting here from that representation, we must take our market back. Our value is the fact that we have information and we have access to these listings. Otherwise, we are going to become irrelevant, and more deals are being done at cocktail parties simply because two people are talking, oh, I think I may sell my house. You know what, you need to talk to Joe, because Joe is looking to buy a house. You don't even need a broker anymore. And then there's the whole purple bricks thing, which I won't get into at this time.
That's right. Well, I can't stand Zillow to begin with because Zillow by itself it's a nightmare for real estate agents because every time I go on a listing and I go, what do you think your house is worth? And they'll say, well,
Zestimate.
Zillow says blah, blah. I go, don't you understand that Zillow is an algorithm? It just takes the price per foot in an average area, 90210. You're taking south of Wilshire, you're taking the flats, you're taking north, you're even taking sometimes the post office. You cannot just take, and you're taking tear down houses. It's just ridiculous.
It takes the power away from the broker.
That's right.
It's what it does. You pay to be a premier agent on Zillow, okay? I've shown so many of our listings, and I always ask the broker, so how did you meet the client? And more times through Zillow. But you're the broker getting the listing. You're the broker that's done the work, put the legwork in, paid for marketing, sat through open houses, done showings. The power needs to be brought back to the broker and not outsourced to platforms like
funny,
Zillow,
but
Trulia, and Redfin.
I've never seen
100%.
one of my clients ever. I ask them a lot. Like I'll say, well, how did you get to me, or who referred you? I've never once had them say through Zillow. So that's interesting. I've never heard that.
We hear it, we see it, we hear it a lot. And the
Never
worst,
heard that.
but to me, the biggest challenge is that they're taking your information, your hard-earned, properties that you've listed and calls that should have gone to you, and they're selling them back to you as a referral. And they are also soon going to be your competition. So.
Yeah.
Well, Redfin's a testament to that.
Absolutely.
Because Redfin pays salaries.
And Zillow is going into brokerage business as well. So
But
let's
do you
not
think
all kid
high-end
ourselves.
agents or high-end clients are going on Zillow and stupid enough to see, there's 3 faces that are advertised. You just pick one random one, or I think you see it, and I
People
don't know.
don't
No one's
realize
ever
the
called me off
difference.
Zillow. I just.
No, the high end, the uber luxury client is not. They have connections, but somebody's looking to spend $2, $3, $4 million, even $5 million. Absolutely. They're looking online, looking on
Let's
Redfin,
talk about
looking
LA
at Zillow,
Times for a
looking-
second.
I want to sort of just go into one more area, like 4 minutes, and I wanted to give the audience a chance to ask you guys questions. So kind of want to end on this. In your view, what are sort of the hottest areas in 2018? And maybe someone can explain to me what the heck is happening on Carbon Beach. It just feels like someone lit up, threw some gasoline on the beach and literally lit it on fire. No, I'll ask the big guys. James.
So I've never been called a big guy. I'm kind of small. I personally, for me, looking at the market shift, we can all talk about the Platinum Triangle and Bel Air and Beverly Hills and Hollywood Hills, but for me, just seeing market shift, it's really been Culver City and the Culver Crest area and some of the streets that sit up there that I certainly never knew about. I mean, we sold a house on Cranks that has one of the best views I've ever seen in the city, and Culver City have their own police and fire department, and it's an amazing city that I didn't know about, and it's still an area that, relatively to the rest of the city, you can still get value. I don't know enough about Carbon Beach to really speak about it, but certainly Culver City.
Let's talk about Malibu for a second. The thing that I find very interesting is that people think, oh, Malibu's so hot right now. Malibu is actually very quiet right now. If you look at the price, there's a house that I wanted to buy 3 years ago that they wanted, I think, $8.5 million. It's still on the market now, and then they would not take any offers over.
You're making too much money, just so you know.
It's now on the market.
I was thinking the same thing.
Well, no, I had a really weird phase where I wanted
I need
to
to
live
go
in
back to the
Malibu. It
sales.
wasn't a second house. I wish. But anyway, thank God I didn't do that. But anyway, it's on the market now for $6.5 million. That's a sign that it's really chilled there.
Malibu
But
is
people think it's so
sitting,
crazy
it is
because you've had Peter Morton's house that sold for 100. You have 2 other houses that have cleaned up at 110 million, and people, Kurt's house, whatnot. So that's a very rare thing.
Yeah, it's not a.
Any other new areas quickly? Someone want to weigh in?
I'm
Ernie?
definitely going to say the East Hollywood Hills, Los Feliz, Silver Lake, all of that area burgeoning. Everything between where we're sitting to the Platinum Triangle, I think, is a growth area. Miracle Mile, all of that. But the best views in this city, and the secret's out now, so we're going to tell everybody, are from Baldwin Hills.
Baldwin
Those
Hills.
are the most gorgeous
Baldwin
views
Hills.
of Los Angeles. It's where all the postcards of LA are taken from.
Yep.
So.
And Lafayette Square has also had this huge,
Not to
upsurge.
forget downtown, where we're sitting. I mean, this market's pretty on fire as well.
Yeah.
Amazing. Well, thanks, guys. Well, I'm going to open this up for questions now. If these guys, I don't know if there's the man, Frankie has the mic. Find somebody. Just as my colleague Hiten said earlier, please try to ask one question and make sure it's a question and not just a sort of a declaration. Thank you so much.
Hey, thanks. Josh, I don't know if this is what you were going to say, but you were mentioning LA Times. So my question is, how important do you guys feel like print advertising is to your business?
Well, I'm glad you asked that because that was really what I was going to ask the panel.
It's the most important. Sorry.
Well, I spend about $90,000 a year on the LA Times, and often asked them, there's no way in my business to know where my leads are coming from, whether it be from the TV, from print, from my mailers, or from online. And so I don't know if I'm just literally writing a check and burning it for $90,000, or if it's literally giving me leads. And I don't know if there's any way you guys are able to generate or figure out where, if it's actually paying off or nobody's looking.
But is it paying off?
I don't read the LA Times.
Are your sellers happy that you're advertising there?
Honestly, they don't. I volunteered for them. They don't say, well, you're going to do a full page ad. I say always to them, I'm going to do a double page ad in the LA Times for you this week, blah, 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 because I like to do it, but I don't know if it's even valuable.
Well, we have The View magazine, which we publish, which is the single largest magazine that's published in Southern California. Actually, I think in California that's self-published. We have 1.2 million in viewer readership, and I see people who walk into open houses, and every once in a while I will sit in an open house for one of my agents, or just because every once in a while I do sell. Hello, my name is Beth, and I'm a real estate whore. I see people walk in with a View magazine in their hand. We've sold major estates because of the View magazine cover. So do I believe in print? I believe in print.
But aside from the magazine, just LA Times, what do you think?
I think that you have different areas that rely on different sorts of
Beverly Hills, Bel Air,
print.
Homely Hills.
Okay. Let's see if there's any other questions.
Thank you. I think the question would probably be directed to the three agents on stage. I think the panel agrees that at the very least there is a correction coming at some point, and I'm just wondering what your thoughts on what that will do to the multifamily and lease market when the correction happens, if those are any further insulated.
I actually think if we identify the Los Angeles County market and you look at all of these spec homes that are going up and you work with a lot of developers, every single developer now wants multifamily.
Absolutely.
It's a huge market right now.
And I feel like the reason for that is, A, we're running out of land, and so people are building vertically, and downtown LA is a testament to that market, but people always see rents as a safe haven for their money. So whereas, the 10,000 building, I don't know who's familiar with that building on Santa Monica, the big glass building, that building fully leased up. And I think there's a lot of people in that building that are concerned about the market, and they want to hold, and they want to rent, and they want to see what happens. So I think the rental market and multifamily or condos for that lower price point is a
growth
very good
area.
place.
It's a growth area.
And the multifamily market is burgeoning. So I think that's got more of a runway.
It's also an affordability issue.
Do we have one more? We'll take one more question if anyone. You, sir, in the front row. Go ahead. Do you want to get the mic? Do you want to borrow mine?
Share yours.
Why is everyone
I'm way back here.
so focused on residential as the stock market? It almost sounds like you guys are stockbrokers rather than a house where at any price for the community, someone's going to come in, buy a home, raise their family there, and guaranteed in 10 or 15 years, they're going to sell that house for...
Leonard,
they
because
are
you didn't
going
ask that
to.
question. That's why we haven't talked about it.
Well, they are going to do that, but you still want to get it. No one wants to overpay for their house or be the last one at the moment to buy at the top of the market, regardless if they sell it for 3 times as much 18 years later.
This is an investment. Anybody who spends the kind of money they're spending, this is the most money they're ever going to spend in their life at that moment. Yeah. So they're looking to hope that they have a good investment. But if you ask anybody in any part of town who bought at the peak of the market in 2007 or 2006, in 2010, if they felt like they really made a mistake, ask them now in 2014, 15, 16, 17, 18, and their property values have skyrocketed. It's the best investment anybody could make.
Well, look at your house, though, the one you used to own. I mean, that house is worth $60 million today, and you bought it for what, $2 million? You built it. Okay, fine. You built it for what, $2 million? Don't you wish you sold it later?
A lot more than that. But my experience is when people start speaking that way, as I say, you're raising your family here, you're buying this for 10 years
right.
or 15 years.
We all agree with that, too.
Yeah,
Absolutely.
we do. But I will tell you that
We
something
wouldn't be here if we didn't believe that.
that unifies everyone in the room, whether it's up on stage or everybody collected in the chairs. We are expected to be similar to stockbrokers because this is Los Angeles, and New York City brokers are expected the same. Kansas City, Nashville, not the same. So you're working in a highly financially sensitive city. People are conscious here about money and climbing the ladder, and so anyone in this real estate market is being asked about their investment quotient and what their house is going to be worth after they buy it and fix the kitchen, whether they're going to raise the family, as you say, and we love to see that happen, or whether they're going to sell it in 2 years after the tax break happens.
And the question is not whether the house is going to be worth more in 30 years from now. We know that's going to be the case. There's not even a question. It's whether you can afford to maintain it. If you buy it and then the market crashes, if you can keep it.
Right.
On that note, thank you so much for everyone here and for the panelists. Give a great round of applause for the panelists.